It's time now for a check of the top business news stories, and I'm joined by Kate Moody. Hi there, Kate. Now, on Thursday, the French government is going to unveil its next economic stimulus plan. What are the business leaders and business owners hoping for, do you think?
Well, some more tax breaks and a lot more financial support for their workforce going forward. The French Prime Minister has promised that at least a quarter of the €100 billion stimulus plan will be directly targeted to help small and medium-sized businesses. Economists have warned that a wave of bankruptcies and layoffs could come if the government doesn't continue to support the private sector after that punishing lockdown earlier this year. Yana Lee has more.
In the south of France, this hydraulics company is finishing up its only order of the year. The business produces and exports plane parts to China.
Celle-ci, c'est une machine qui normalement tourne tout au long de l'année. On en fait entre 5, 10 et 20 les meilleures années.
The company lost €500,000 already since the start of the crisis. That's 10% of annual profits. Like many business owners, Sophie Deson benefited from the government's previous stimulus plan, including cuts in payroll taxes and guaranteed state loans. She's hoping the measures will last.
On aimerait tout d'abord que les mesures déjà mises en place perdurent un petit peu. On aimerait aussi qu'il n'y ait pas de taxes supplémentaires ou d'augmentation fiscale, en tout cas pour l'instant.
Exceptional measures for exceptional times. The businesswoman is particularly worried about her employees' productivity, fearing that new health and safety regulations could slow them down.
Ça gêne, c'est pas comme avant, quoi. En fait, on a un truc sur le visage, c'est gênant. Pour la respiration, pour la vision.
The French government has already set out its goals and its budget for the next phase of its plan. €100 billion in a bid to return to pre-crisis GDP by 2022. At least a quarter of that budget will be dedicated to helping businesses get back on their feet. The details are set to be released on Thursday. But Paris has already announced plans to slash taxes on production, help companies with their digital transition, and invest massively in relocating jobs back to France.
As Lebanon's Prime Minister-designate kicks off talks to form a crisis government, experts are already calling for the country's infrastructure and economy to be rebuilt on new, stronger foundations. The World Bank has said the blast in Beirut's port in August caused more than $4.5 billion worth of physical damage and still more to economic output. Farid Belaj, the World Bank's vice president for Middle East and North Africa, spoke to Stephen Carroll in this week's People and Profit.
It is a huge number that we have put on the table. Any country will have a lot of difficulty absorbing it. Now, Lebanon has a large set of partners and a large set of countries and institutions that are ready, willing, able to come to the rescue. The condition is for the Lebanese government to be serious about moving ahead with reform. And this is really at the center of everything we have put on the table vis-à-vis the Lebanese government over the last very many years. This time around, this is a wake-up call. This is a self-inflicted wound, unfortunately, and I believe that the Lebanese policymakers, the people of Lebanon, people of Beirut, have waken up to the need, really, to turn a page and to look at the future through totally different lenses. The numbers, as you mentioned, are very big, but at the end of the day, everything can be managed if you have the political will to move forward.
And you can see more of that interview, including his thoughts on reform in Lebanon, in People and Profit. That's airing Thursday morning at 11:45 Paris time. Let's check in on the day's trading action. Now, the major European indices closed higher, gains of around 2% each for the Frankfurt DAX and Paris CAC 40. Shares of the drinks company Pernod Ricard rose 2.6% after it reported a €1 billion drop in profits for the year, still not as steep as expected. Wall Street's also in the green, this despite data showing much slower than expected growth in the U.S. private sector in August, just over 400,000 jobs added. That's less than half of what economists had expected. Meanwhile, the Congressional Budget Office has warned the U.S. government debt will pass 100% of GDP next year, with the budget deficit hitting a record $3.3 trillion because of the coronavirus pandemic. Moving on to some of the day's other business headlines now. United Airlines has confirmed it will cut some 16,000 jobs in October, saying its business has been devastated by the pandemic. That's still less than half the number of layoffs the carrier had warned of. United saying that many employees had chosen early retirement or voluntary departure packages. Delta and American Airlines have also warned of deep job cuts after a temporary moratorium linked to government aid runs out at the end of this month. Financial regulators in Switzerland have opened an enforcement case against the bank Credit Suisse. The investigation stems from a spying scandal which forced its chief executive to step down earlier this year after it was revealed that former employees had been placed under unauthorized physical surveillance. And Germany has rolled out the red carpet for Tesla boss Elon Musk. The entrepreneur met with top politicians to discuss progress on the development of a COVID-19 vaccine. Tesla has been helping to build equipment for German biotech researcher CureVac. Last year, Musk also chose Berlin as the site of a major new factory to produce his trademark electric cars. Australia's 30-year run of economic growth has come to an end as the coronavirus pandemic pushed the country into recession. Economic output slumped by a record 7% between April and June, although average household incomes were protected by government support measures. Catherine Viette has the details.
The end of an era for Australia as it loses its nickname as the lucky country after tumbling into a record recession.
Our record run of 28 consecutive years of economic growth has now officially come to an end. The cause? A once-in-a-century pandemic. The effect? A COVID-19 induced recession.
Australia's output plunged 7% between April and June, due mainly to a drop in consumer spending that fell by 12% over the same period. More than 1 million people have lost their jobs, but the effects have been mitigated somewhat by the Australian government's stimulus measures. Nearly 29 billion euros has been funneled to businesses and individuals, most through a program called JobKeeper that's helped support the wages of workers over those 3 months. But with Victoria State back under lockdown, the long-term effects are hard to gauge.
If they don't announce significant changes in the October budget, and that remains to be seen, there will be a big pullback in terms of government support. So that's another danger zone for the economy, that final 3 months of the year.
Still, thanks to strong exports of raw materials to China and a shorter initial lockdown period, Australia's economy has fared better than that of many other countries. France's growth plunged by nearly 14%, while the world's biggest economy, the U.S., shrank by 9.5%. And Australia's finance minister remains optimistic, saying there is hope and a road out.
Australia certainly far from alone there as they combat this unprecedented recession.
OK, well, thank you very much indeed for that. Our business editor, Kate Moody, thank you so much. I'll be back at 9:30 Paris time. Stay tuned.